Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of Brent crude oil, spot gold, and Bitcoin. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
ICE Brent crude oil futures. A significantly lower bearish long black Mariposa and bearish black crow yesterday, after this previous session's huge indecisive spinning top pattern. Together, these two and the previous session's bullish white Mariposa and bullish white soldier make up a 3-day bearish evening star pattern. It'll be interesting to see if prices follow through with this giant of a pattern today and onwards. The market opened yesterday just over the April 2024 high at 92.07 and under the October 23 high at 93.79. Above this is a free area between the October 23 high at 93.79 and the 2022 to 2023 base congestion between 97.68 to 99.61, including the September 23 high at 97.68 and a 50% Fibonacci line of the 2022 to 25 move at 98.89 and the November 22 high at 99.61. The market started to move up towards this congestion, but halted and turned lower soon after pushing through the October 23 high, much as it halted back last Friday and then dropped lower yesterday. Now, down through this Fibonacci congestion between 88.96 to 89.39, down through another congestion band between 86.67 to 87.96, the July 24 high at 87.96, and then down through the bright green neckline extension, currently 85.05 of the September to November 24 head and shoulders top, and finally down through a small congestion between 81.41 to 81.86, made up from the August 23 low at 81.86 and the interesting June 25 high at 81.41, where price is halted just underneath before turning higher and closing within the 86.67 to 87.96 congestion band, just under the July 24 high. Below yesterday's low, we have a free zone down to the next congestion at the September 23 high at 77.54. This congestion between 81.41 and 81.86 is beginning to look actually pretty solid right now. But we still have the outcome of the 3-day bearish evening star pattern to deal with. Now, so far today, a higher open in between the 88.96 to 89.93 congestion and the lesser Fibonacci line at 91.13, a little short of the April 24 high at 92.07, but then a drop down and through the 86.67 to 87.96 congestion, stopping just short of the bright green neckline before pulling back up to move through unchanged over the April 24 high and up to challenge the October 23 high towards yesterday's high as well. Spot gold, a reactionary bullish white soldier after the previous session's third countering bearish dark cloud cover pattern and outside day. That also hid an indecisive spinning top in there. We still have the bright red February based ascending triangle pattern along with its topside targets of a primary target X at 54.40 and target X1 at 55.80, but I don't think this is the dominant near-term pattern here. Instead, I think it is the previously noted 2 weeks ago small bull channel, currently 51.19 to 55.22, which I've highlighted in bright green on my daily chart. We've also closed back up just over the dark blue middle time yesterday, currently at 51.61. The dark blue late December 25 to early February 26 bullish shift pitchfork, which is seemingly taking over as the larger and more longer term showrunner here for this market. However, please keep in mind the key 50% Fibonacci line for the whole late January action at 49.99. So far today, a slightly lower open, but staying above the dark blue middle time, but not pushing to test yesterday's high so far. Bitcoin. A bullish opening white Mariposa and the second bullish white soldier yesterday, with prices pushing through the November 21 high at 68,977 and a 50% Fibonacci line of the November 22 to October 25 move at 70,929, as well as the bright green upper time, currently at 69,711 of the potential showrunner here for the recent moves, the bright green early October 25 to mid-January 26 bearish Andrews pitchfork. The market halted just short of the next resistance, which is the lesser Fibonacci line at 72,023, before heading back down to close right on the bright green, now breached once more, upper time. In many ways, the market continues to spin around the interesting key bright red neckline extension, currently at 67,756 of the August 21 to January 22 head and shoulders top pattern, if moving a little higher each few days. There is congestion all around, notably below as what is increasingly looking like a key support for now at least, the 50% absolute Fibonacci line at 63,129, whilst above we have the congestion between 73,779 to 74,444, made up of the March 24 high and the April 25 low respectively. Going back to the bright green bearish Andrews pitchfork, this is being tested for a second consecutive week, though it has not been broken, just breached. But I am of course prepared to finesse this to the this bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move, should this be required. In the big picture, we still have, just about hanging on, a very large October 25 to date bearish halfway hesitation in progress. The primary and secondary targets for this have already been achieved, leaving just the much harder to reach tertiary target X2 down in the 54,000 zone. I'm starting to have some serious doubts as to whether we will reach target X2 anytime soon, and I am considering retiring it. But a key factor in this will be if the whole 2026 to date action, if it will be also become a bearish half hesitation or a potential basing action. So far on this, the picture is unclear, but I suspect the dark blue February to date uptrend, currently at 64,562, will likely play a key part in this. Now, so far today, a reactionary bullish opening white Mariposa, moving back up over the bright red neckline again, higher, and well, it's not really that. It's just opened a little bit higher and then dripped down to the green breached upper time, and we're just edging below it at the moment. We're really not doing very much at the moment.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpick and ADM Investor Services International Limited. And here comes the final important bit.